So recently, you may be aware that I attended an in-person session on the employee retention credit at the IRS. It was a couple months back, and recently I just received an email with a one-page overview from the IRS on the employee retention credit. I think it's a really important document. It's a really interesting document as well, kind of in how they're phrasing certain things, which really gives an insight into how the IRS is looking at the employee retention credit. A little bit of background. Currently, the employee retention credit, the IRS has put processing of claims on hold. And the IRS has stated that because there's massive fraud in the system, which is true. Back in December, there were tens of thousands of fraudulent ERC filings. These were, to put a different video on this, but these were companies that didn't exist during COVID. These were companies that had no employees during COVID. And so there certainly is a element of fraud here. Unfortunately, though, as the old expression goes, the IRS is kind of throwing the baby out the bathwater because they're looking to say, well, all claims are fraudulent. The IRS Commission actually testified in front of Congress a couple weeks back saying, well, no, not all claims are fraudulent. There's certainly legitimate claims in there. It's just hard for us to get through and figure out which ones are legitimate, which ones are illegitimate. It's a more nuanced conversation, but I want to go through this PDF I got because I want to highlight a couple of things here, things that are very important for you in order for documentation, but also some areas where the IRS is taking a position that might actually not be held up, not actually be correct. It may be overarching or overly broad. I wanted to touch on that as well. So I'm going to share my screen here, and so we can walk through this letter together. So this is the letter here that was sent out after the seminar. Of course, generally businesses, it talks about what businesses are eligible, what taxpayers are eligible and not eligible. And so generally businesses and tax exempt organizations, right? So if you're a nonprofit, you're eligible for this as well. If you were shut down by a government order due to COVID-19. So kind of the first thing that caught my attention was the phrasing shut down. This language here tends to imply, well, you had to be fully shut down. But really where all the rules are, when you read through all the notices, all the backup information that sets the IRS created, that sets the rules of the ERC, the shutdown has a lot of nuance to it. And there's what's called a full shutdown or a partial shutdown or partial, and to go further, partial suspension of operations. And if you go even further, a partial suspension of operations is the inability to provide goods and services in ordinary course, with that inability being not less than 10%. There's a lot of nuance there, and this letter that comes out kind of really paints in black and white, shut down versus not shut down. I thought that was interesting. Obviously, if you experience a decrease in gross receipts, you're eligible. And if you are a recovery startup business, you're eligible in the third and fourth quarters of 2021. Small side note, the only business, if you file for the ERC in the fourth quarter of 2021, the only business eligible are what are called recovery startup businesses. So if you did file for that, you want to make sure you go back and identify, well, one, are you actually qualified as a recovery startup business? And two, did you check the right box to indicate that you're a recovery startup business? Obviously, you have to pay wages and they have to be qualified wages. So then the IRS goes into fiduciary responsibility. And this is really interesting because the IRS has been hammering on this contingent fees, because it's interesting because generally speaking, in fact, when I was at this seminar, somebody rose their hand and said, wait, why are you guys hammering the contingent fees? Everybody in the entire industry charged a percentage of the refund which the taxpayer is eligible for. So that was a very common pricing practice. Why now are you coming up and saying we don't like contingent fees? So this is really interesting. And I have a whole separate video on this part, on the case law around this. But so it talks about tax professionals. So if you file, you might wonder, well, how does this affect me? And it doesn't, but the IRS is coming after, they're stating that tax professionals have a fiduciary responsibility requirements. Well, yes, of course. It's critical that as a tax preparer, that you're providing accurate determination of eligibility and credit amounts. Obviously, you want to make sure that the calculations are correct and that you have good documentation that clearly demonstrates substantiates your eligibility. Now, misrepresentation of eligibility, saying someone's eligible when they're not, could lead to severe penalties. And then what's interesting though is they reference Treasury Circular 230. What's interesting about this, and I encourage you to go and look at my other video on case law around this, is that, well, does 230 apply to the preparation of ordinary refunded claims, right? And so according to Circular 230, Circular 230 prohibits charging unconscionable or contingent fees on services related to highlight any matter before the Internal Revenue Service, including the employee retention credit. So this is really interesting because basically, the IRS is taking the position, well, no, you can't charge a contingent fee. However, the case law appears to contradict this. So I have another video on this on Ridley versus Liu in the filing of ordinary refund claims, which appears that an employee retention credit is the filing of an ordinary refund claim. This phrase right here, any matter before the Internal Revenue Service, is a really important one, because a matter before the Internal Revenue Service is one that requires representation. It's when there is a controversy that arises. So there's an audit, there's an investigation. And so at that point, a CPA or an attorney is practicing before the Internal Revenue Service. And so at that point, Circular 230 comes in. However, prior to that, a CPA, attorney, tax preparer, whatever person who is working on an employee retention credit or other refund matter is not practicing before the court. They are in the business of tax preparation. And the business of tax preparation has a separate set of regulations. And so again, I go into that much more detail in the Ridley versus Liu contingent fee conversation. But it's very interesting that the IRS, the Office of Criminal Investigations, who put this seminar on, is really focusing on this. It appears that it might be an overreach by the government at this point. Interesting that they put this on here. You know, I think it certainly illustrates how the IRS is thinking about this and how they're really trying to hone in on fraudulent claims. They're really trying to hone in on fraudulent preparers and folks who have broken the rules. So, and then lastly, they talk about the withdrawal program. And I have another video on the withdrawal program. We have the voluntary disclosure program, which is currently closed, which maybe would reopen. And then we also have the withdrawal program. And so you have the opportunity to withdraw it. The key thing here is that the check, basically you can't have cashed the check yet. If you've already cashed the check, you've already received it and you've cashed it, then you can't withdraw. But if you've not received it yet, you can withdraw. You can say, oh, I made a mistake and I want to just ignore my filing. And that's an option as well. They bring up the fact that you have that withdrawal program as well. At any rate, I wanted to go over that with you. I thought the most interesting part was this fiduciary responsibility and this contingent fee discussion in Circular 230, which doesn't necessarily always apply to the preparation of ordinary tax returns or ordinary tax refunds and the overview of the eligibility. So hope this was helpful. If you have any questions, go ahead and ping me, reach out. Thanks.